Hey guys, welcome to another video in the Refined series. And in this video, we'll be talking about order blocks. This is a continuation of the introduction to PD arrays. And if you've not watched that video, I recommend you go back and watch the CD video. So, from the term order block, you could easily know that it just simply means a block of orders. So, when we were defining PD arrays, we said that an array simply means a structure of data that enables efficient retrieval of data. So we talked about that in the introduction video. And to buttress more on that point, a bullish order block is basically a point of interest where buys are stored. Okay, a block of buy orders. And a bearish order block simply means a block of sell orders. Very simple, straight to the point. I'll come again. A bullish order block is simply a block of buy orders, and a bearish order block is simply a block of sell orders. Now, how do we spot these blocks of sell orders and buy orders? We spot these blocks by pointing out for bearish order blocks the last bullish candlestick before price reversal downward, and for bullish order blocks the last bearish candlestick before price reverses upward. So take the image on your screen for an example. So this is price taking out this high in the bearish market structure. We say price is rejecting highs and breaking lows. So price rejected this high, and during this move upward, we had a series of bullish candlesticks as price kept moving upward. Now we're saying that the last bullish candlestick before price reversed is what we refer to as the bearish order block. So let's take for instance, this is the last bullish candlestick before price reversed. And I hope you could see my screen properly. And as soon as price began to reverse, okay, this last bullish candlestick becomes a bearish order block. And what we want to see price do is we want to see price mitigate that order block. And when I say mitigate, it basically means I'm just saying you want price to tap into the order block. Now, this last bullish candlestick before price reverse becomes the bearish order block. So this is where the block of sell orders are stacked, and price always refer to these points to retrieve orders and then continue its move downward. That's just the same thing for a bullish order block. So let's take for instance price going by in a bullish market structure, price is rejecting lows and breaking highs. Price comes, rejects off this low and begins to reverse. And during this reversal down, price was putting in series of bearish candlesticks. Now the last bearish candlestick that was formed before price began the reversal upward becomes the bullish order block. And what does price do? Price, the algorithm in the market will always refer to this point, right? To price will always refer to this point, and price comes, retrieves the orders that were lying in these blocks, right? And then continue to push price upward. We continue the move upward. So that is just a pictorial view of what a bullish and a bearish order block is all about. Now let's go into the chart to put this image to practical views. So this is a bullish. Now you have to understand that this will definitely make sense to you more if you understand a bullish and a bearish market structure. And the video on market structure is already out there. Please go and see the video to understand this. So we already have this bullish market structure here, and we already know why it is a bullish market structure. Price rejecting lows and breaking highs. Now let's begin from this point of reversal here. Price rejected this low, and we talked about lows and highs in the introductory video to PDRAs. So this should not sound as news to you anymore, right? So price rejects off this low, put in this series of bullish candlestick, and then price reverses again to take out this low here. Now, during this move downward, we saw we saw price put in series of bearish candlesticks. This series of bearish candlesticks is what we refer to as an order block. As soon as price close above these bearish candlesticks. Okay, so two things to note. It's not every bearish candlestick that is an order that is a high probability bearish order block. And because of what I just said now, there'll be a video on high probability PDRAs, what to look out for to qualify a PDRA as a high probability PDRA. So look out for the video. It will be out shortly. For this video talking about order block, and I want to show you examples of a bullish order block. Now I want you to look at this series of in this move down here. I want your eyes to be fixed on the series of down close candles that were put in until this point. Now the last down close candle that was put in onto this point of reversal, was this candle here. This was the last bearish candlestick before price started reversing. And as soon as price closed above this, above the open of this bearish candlestick, as soon as price closed above the open of this bearish candlestick, it qualified to become a bullish order block. And what the price do? Price closed above it with this candle here. Okay. Price closed above the open of this candlestick. And if you watch the video on intro to beginner's guide to trading, you understand what I mean when I say the open of this candle. As soon as price closed above the open of this candle, this last bearish candlestick before price started putting up these high prices becomes the bullish order block price will be referring to retrieve orders for more upward directions. And I want you to note how price reacted off this bearish candlestick as soon as price got into it. Price got into this bullish order block, and then price rejected off of it. This was the PDRA used to push price higher. I hope you understand what I'm saying. And even in this series of price action, you could see again that price put on this series of downward candles here. And as soon as price closed above this last bearish candlestick, this now became another order block inside of this price action here. And as soon as price retraced into this order block, in this case, a bullish order block, price put up high prices. So we have this first order block, price closed above it, ran into it again, retrieved all the buy orders inside of the block, pushed price high, and we saw price retrace again into this last bearish candlestick before this upward price movement. Price retraces into it, stack up all the orders resting inside of this last bearish candlestick, and that pushed price high. And we saw this, and we see this last bearish candlestick as price retraced into this other one, right? As soon as price got into this last bearish candle before this move higher, price rejected off of it. This is another order block, right? The last bearish candlestick before price moved up. Now we had price consolidate, not moving up or moving down in this series of candlestick. And then at some point, price decided to go lower, right? As price retraced low into this, still inside of this order block, right? The last bearish candlestick, which is here, these two candlesticks here. You could use this one here, but I'll prefer you use this one here. These two series of down close candle became an order block as soon as price did what? As soon as price closed above the open of this series of down close candles. And this qualified it to become what? An order block. And you could see how price rejected off of it. Now this is another example of an order block here. This is an order block, the last bearish candlestick, right? It's an order block. Price retraced into this last bearish candlestick, and this candlestick was confirmed an order block as soon as price closed above the open of this down close candle. Price retraced into it, pick up all the orders that were resting inside of it, and sent price higher. Okay, then we saw price retrace, right? Retrace, taking out this low, taking out all the orders resting inside of this order block, right? Which is also called what? Liquidity. If we don't, liquidity will be out soon, so don't worry. And this is an order block, right? This becomes the last bearish candlestick before price put in this series of up close candles. And I want you to notice how price reacted off of it. Price came, retraced into it, and did what? Push price higher. Okay, so just keep finding more examples. So we had price here, take out this liquidity here. The last bearish candle before price put on this series of up close candle is where is this candlestick here. As soon as price closed above it, it became what? An order block, a bullish order block. And that was what sent price higher. Okay, another example is here. We had price take out this liquidity, this low, right? But where is the last bearish candlestick? This large, this big down close candle here. And what qualified it as an order block? As soon as price closed above the open of this candle, this qualified it to become a bullish order block. And as soon as price retraced into it, we saw price pull move higher. Okay. I hope you're understanding what I'm saying. That is just basically the technicality around bullish order blocks. Now we're going to go do the same thing for a bearish order block as price put on this. Let me look for a, yeah, is perfect example for a bearish market structure. So we could find bearish order blocks. So you could find bearish order blocks. Okay, there are a lot of examples. You can go over your charts to find more examples. Right, go to your charts and you will see so many examples of both bullish and bearish order blocks. That should be your take home assignment after this lecture. Okay, so let's use this price data. Go for something better. Sorry. This class is normally done in real time, so I don't normally like go and teach it in real time. So you could learn in real time as well. So let us take this series of bearish structure to look for bullish order blocks. So what are bullish order blocks? The last bullish candlestick before price reverses downward. So we have price come, take out this high, right? Take out this high. And during price movement upward, taking out this high, the last bullish candlestick before price started reversing downward is this candle. And this candle was confirmed a bearish order block as soon as price closed below the open of the up close candle, as so called the bullish candle. And I want you to notice how price reacted as price retraced into it. Price retraced into it and price sold off. During this retracement into this bullish order block, this bearish order block, sorry, the last bullish candlestick before price started reversing is this series of bullish order block. You could actually use this if you want, but I would prefer you use this both. Okay. When you have scenarios where we have something like this, three consecutive or two consecutive up close candles formed during a retracement into a PD array, in this case an order block. You could use these two last bullish candle as your reference point for an order block. And as soon as price closed below the open of this last series of up close candle, this qualified it as a bearish order block. And I want you to pay attention to how price reacted off of it. You see that price kept playing around this box, but price never closed below the low of this order block. So this was price ranging around this order block, but as usual, as soon as price stacked up all the sell orders inside of this bearish order block, it sold off. Now during this retracement low, we had this series of up close candle, one, two, three, four. Okay, so you could actually use two of them, which is this. As soon as price closed below this series of up close candle, it qualified as a bearish order block. And what price did? Price came back, retraced into it. Did not really fill it up. Price used this, right? And as soon as price got into that order block, price sold off. Price sold off. That's basically all about order blocks. Okay. Bearish order blocks, the last bullish candle before price reverses. Bullish order block, the last bearish candlestick before price reverses. So during this series of retracements, right? The last bullish candlesticks before price reversed was this two candlestick here. And as soon as price closed below this series of up close candle, this became a bearish order block. And look at how price sold off as soon as price retraced into it. Price sold off. Price sold off. Okay, so we have this example again. This series of up close candle retracing into what? An order block here. Why is this an order block? This is the last series of up close candle before price reversed lower. Price got into it, stepped into it, mitigated or filled in all the sell orders here, and price did what? Sold off. We have another example here. Price comes, sweeps this high here. Okay. And as price swept this high, the retracement into this high offered us two series of up close candle, which we can spot here. And this up close candle became validated as an order block as soon as price closed below the open of this candle. You could see as price retraced into this order block, bearish order block, price sold off. Okay, we have this as well. Although this order block wasn't filled in. Okay. We have this price sweeping this high here. Okay, the last series of bullish order blocks before price reversed were this from here, this stack of order blocks here. As soon as price closed above this order block, this became a bearish order block or order blocks because they are stack of order blocks. And you could see that price used that range, those series of uploads candle as an order block to send price finally lower. I hope this video was insightful, and I hope you would go into your charts and mark out series of order blocks. You could spot both bearish and bullish order blocks, because you see, I'm going to say this here, no matter what I do and show you on this chart, if you don't put in the work, if you don't go back to practice what you've seen in this market for yourself, you're not going to progress. And it's not a course. It's more like that's how it works in this industry. So you learn, you practice, you learn, you practice, you learn, you practice. These days may not make sense in the first 1 week of your study. It depends on how your mind works. But one thing I want you to understand is that no matter how shallow your mind is, if you give yourself to study in this market, you are going to be very, very successful. This is an environment where you could become very successful if you give yourself to study and hard work. So, little recap before we end this class. Bullish order block, the last bearish candlestick before price reverses upward. Bearish order block, the last bullish candlestick before price reverses downward. And that will be the end of this lecture. Until we meet again, until the next class, good luck and happy trading.